Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Okay everyone, let's talk business. So in my chat and on Shitter, I've been seeing a lot of a new narrative. I call it the magic dividend, where AMC's fundamentals will keep on improving. I'm hoping for that as well. We will keep paying down debt. I'm hoping for that as well. And then the company is going to declare a magic dividend. The shorts would have to pay that dividend. Yeah, maybe over 5 years ago. It would expose the real short position. It's going to catch them by surprise. Then there will be a MOAS. Give me a friggin' break, people. Did everyone forget that was exactly how the ape was sold to us? Did everyone miss the GME split dividend? Let me tell you how this is going to go down if it ever happens. Morgan Stanley, who leads our board of directors, and Citi, our chief investment banker and short seller of AMC, will plan the magic dividend in our very own boardroom, just like they did the ape, just like they did the reverse split and conversion. We will telegraph it. They will be ready for it, and all of Wall Street will work to protect itself from it, including the DTCC, Computershare, the clearing firms, everyone. But if you want to know what will work, you can get a hint from the chief executive bullshitter himself. I learned a long time ago, if you want to know what your enemy is really afraid of or what their weaknesses are, examine the opposite of their lies, the original posts from Adam Aaron. Candidly, I've seen no evidence of so-called fake or synthetic shares exist. Now, people, this is against a backdrop of billions of FTDs. This is the same CEO that told you, yeah, I have to put in phone calls because we're on the threshold list again. Anyway, this preferred equity dividend goes only to company-issued shares, so it will have the impact of a share count or unique dividend many of you have sought. See, I've heard this story before. Again, Adam Aaron, as to the existence of so-called fake or synthetic shares or the naked short selling of AMC shares, we are unaware of any information validating these theories. Also, we are unable to make any comment on the considerable trading of put and call derivatives. Now, guys, I have to tell you, there is only one thing that they are afraid of, and the hint is in here. That's that the real short position is exposed. The other thing they're afraid of is a black or white swan. That's it. That is the only way. That is the only path to victory on this trade. Okay, we could cure cancer. All right, we could pay off all the debt. These people are not going to cover because it represents a catastrophic event for them. I believe there are billions of synthetic shares out there waiting to be reconciled, unaccounted for. Exposing them is one path to forcing them to cover. The other is a black or white swan. That's it. There is not going to be any help from regulators. There's not going to be a new phase 6. We've fallen for it all. It's okay. But at least look to the future with clarity. The only path to victory at this point is a black or white swan, an unexpected event that would attack the leverage chain of our predatory short hedge fund enemies, something that would turn their prime brokers against them, okay? Or if you could expose the real short position, if we could prove that the apes owned the float 2-3 times over, you can't explain that away, okay? So that is really the only way going forward. Now, with all that in mind, are you keeping an eye on our enemies? I do. Why? Because I'm watching for trends in the industry. I'm watching for regulatory challenges. What are they buying and what are they shorting? I'm watching for the next swan to hit the industry like the Credit Suisse Archegos debacle. Here is where you'll get the first hints. So pay attention. Headline from Reuters. Hedge funds short U.S. financial stocks at near record levels, according to Goldman. Global hedge funds built bearish positions this week to the highest level in nearly 5 years, Goldman Sachs said on Friday, without citing the underlying reasons. Quote, financials was the most net sold sector on the U.S. prime book this week and saw the largest net selling in 7 weeks, driven entirely by short sales. The bank's Prime Insights and Analytics team said in a note about trading flows, the ratio between long and short positions is at a historical low, below 1.7 times. At the beginning of this year, the long-short ratio was 2.6 times, sharply declining in March in the wake of the regional banking crisis. Overall, hedge funds are underweight financials at the lowest level since May 2020, Goldman Sachs said. Bank shares have plunged this year. The KBW Bank Index is down nearly 23% year to date, while the S&P 500 Banks Index fell over 11.26. So what does that mean for us, Uncle Frank? That means the hedgies are expecting more trouble in the financials, and I'm rooting for a rally in that very same sector, a surprise rally. Now let's scour the headlines together to see if we could take the temperature of the hedge fund industry. Chinese regulator wants brokerages to restrict leveraged stock trades. Top story. The China Securities Regulatory Commission, the country's securities watchdog, wants brokerages to limit the amount of leverage available to hedge funds that borrow large sums of money via a complex derivative business to trade stocks, according to a report by Reuters. Elliott targeted $7 billion in new cash for distressed debt investments. This is what they're investing in. Elliott Investment Management, the U.S.-based activist hedge fund firm founded by Paul Singer, is looking to raise up to $7 billion in new cash from investors to take advantage of stressed and distressed trading opportunities, according to a report by Bloomberg. Another, Sculptor Fund, sees $667 million in client withdrawals. Investors pulled $667 million from Sculptor Capital Management's main hedge fund during the third quarter of the year, marking the 6th consecutive quarter of net redemptions for the fund, according to a report by Bloomberg. Total assets at the firm fell by about $1 billion in the third quarter to $33 billion. Man Group sticks by bearish emerging market stance. Man Group, the world's biggest publicly listed hedge fund, is sticking by the contrarian bearish stance it adopted during an emerging market rally earlier this year, when it predicted a yet-to-materialize violent sell-off, according to a report by Bloomberg. Let me tell you how I read that. Okay, the biggest publicly listed hedge fund of all time went short emerging markets. Okay, they haven't got the big rally that they're looking for. Okay, sound familiar? They're stuck. And here's the last one. Alt investment bodies fire first salvo in legal battle over SEC power grab. Hedge funds and private equity firms have fired the first salvo in their legal battle with the U.S. SEC over what they see as a power grab by the commission over the adoption of new rules they say the regulator lacks the authority to impose. I put that last for a reason. Okay, guys, this stuff takes years. All right, the SEC is not going to do anything, okay, anything that might cause the markets to roil, that could take down a prime bank or broker or a clearing firm. Okay, not before an election year, guys. These people are not going to help us. In fact, I believe they are always helping our enemies. Guys, they call me a shill all the time because I won't fall for their bullshit anymore. I have accepted we cannot win on this trade while Wall Street banks that are short AMC are backing Wall Street primes that are short AMC, that are enabling predatory short hedge funds that are short AMC, all while regulators ignore everything and hand out token fines for millions of violations, while market makers owned by prime brokers and hedgies run interference for them in the daily manipulation of AMC, and while Morgan Stanley and Citi, who is also short AMC, is sitting in our boardroom and Adam Aron signs off on whatever they tell him to. It will only be a white or black swan event that hits the hedgies and primes where they live that'll cause a short covering event. Think about it, guys. If you had to choose between going out of business and naked shorting more shares, what would you choose? More headlines. Highest ever Treasury short positioning by hedge funds into last week was accident waiting to happen. Massive short covering ensued, pushed down yields. From Yahoo Finance, global watchdog warns over very high leverage in hedge funds. Bloomberg, U.S. weighs leaning on banks to curb hedge fund leverage trading. From Financial Times, FSB warns of risks posed by hedge funds' hidden leverage. From Investing.com, U.S. regulators consider curbing hedge fund leverage trading by leaning on banks. By Investing.com. From Quartz, hedge funds are risking financial turmoil by shorting $600 billion in U.S. Treasuries. From Fortune, hedge funds are exploiting a shadowy trade to cash in on the debt crisis, and the SEC and Fed are questioning prime brokers, sources say. Where do you think I'm getting this from, guys? And now let's talk about Citibank, our chief investment banker, a company that is short AMC, a company that has slashed its price targets just like Credit Suisse did on AMC multiple times, reiterates all the time that they have a sell rating on the stock. This is our chief investment banker. Here are their headlines. JP Morgan Chase and Citibank are abruptly terminating accounts, triggering chaos and confusion for customers. CFBP orders Citi to pay $25.9 million for intentional illegal discrimination against Armenian Americans. Citi hid discrimination by giving consumers false reasons for credit denials. And now from Reuters, Citigroup considering at least 10% job cuts in major businesses. Citi weighs shutting municipal bond trading business down. Suit accusing Citibank of aiding and abetting fraud scheme will proceed in Manhattan federal court. And now you can see what they are making money on. From Reuters, Citigroup profits beat estimates on trading, interest payments. CEO pushes overhaul. So where is Citi making their money now? From trading. And now that interest rates have gone up and the credit card minimum payments have tripled, that's the only place they're making their money, in trading. That's where we have to watch them. So, Uncle Frank, why is Wall Street short itself? Why the huge short on financials? Let's look at one of our short sellers, B of A, and see if we can get a clue. Bank of America stock is slumping. One director bought up shares from Barron's. B of A stock has slumped, and a director recently purchased shares on the open market. Now, guys, has Adam Aron, the entire senior management team, or the entire board of directors of AMC, have they purchased even one single solitary share of AMC in over the past 5 years? The answer is no. They've sold over $1 billion, but they haven't bought a single share. Let's continue. B of A is down about 17% this year. Earnings in 2023 have been strong, but investors may be focused on the billions of dollars of bond losses the bank is sitting on. Okay, let's pause. Now, who are the big primes? Morgan Stanley, B of A, Goldman Sachs, Citi, right? Okay, Morgan Stanley runs our board of directors. Citi is our chief investment banker. Now, I want you to ask yourself this question honestly. Do you really believe executives from those companies are going to do anything to hurt the interests of the people that they actually work for, the prime banks and brokers. Guys, think of it this way. All of the prime banks, all of the prime brokers have billions in unrealized bond losses. You know what else they have? Billions in securities sold yet not purchased. Guys, I promise, I give you my word that the two executives that are in our boardroom the most are not going to do anything deliberate to hurt the interests of Wall Street. There will not be a surprise dividend. Okay, they work for them, they work with them. They are not going to do anything to hurt the interests of Wall Street. I promised. Okay, also, let's continue. At the end of September, Bank of America had unrealized losses of $131.6 billion on the bonds it plans to hold to maturity, up from $105 billion at the end of June. Okay, it's getting worse. It's getting worse at B of A. B of A is one of AMC's short sellers. Accept it. Here's another article. Bank of America is developing a big problem, commercial lending. All right, I've been harping on this for a while. We are at the beginning of a terrible commercial real estate crisis in this country. I don't know when it's going to completely blow out the ceiling. We saw WeWork take the pipe, but maybe there's more. From the article, we have written about the rising issue of commercial loans within the banking industry. B of A has been increasing its exposure to commercial loans. You need to do due diligence on the banks that house your hard-earned money to make sure it's safe. And from Yahoo Finance, one of my favorites, insiders at Bank of America sold $16 million in stock, alluding to potential weakness. Open your eyes, guys. You still think the prime brokers aren't working against us as a team? Well, lucky for you, Uncle Frank has a long memory. From Bloomberg, Wells Fargo bans advisors from GameStop and AMC recommendations. And what's going on recently with Wells? Their stock rose 13% after Warren Buffett praised it back in 2009. But now we know he quietly sold 20 million in shares the same day. Have you guys ever wondered if the little brokers are on our side, or are they all just a part of this Wall Street scam? Uncle Frank, why don't you have a channel sponsor like the other YouTubers? You like to make money, don't you? Sure I do. But guys, here's the problem. I was thinking about opening a new account at Moomoo last week. I mean, I like free stocks like everyone else, so I called because I had some questions. I asked the guy that finally picked up the phone my most important question. If I own 1,000 shares of AMC, can I buy 100 shares on margin? He had to do some research before answering, but to my surprise, he said AMC wasn't a marginable security at Moomoo. But then he added, I could short it though. Well, that doesn't seem fair, does it? It would seem you're giving some unfair advantage to another party or protecting yourself at my expense. I push back by saying AMC is a company that's over 100 years old and it's listed on the New York Stock Exchange. It has over $500 million in liquidity. It's the largest business of its kind in the world, not just the U.S. I can short the stock, which requires a margin account, but I can't buy 100 shares on margin if I own 1,000? You see, guys, even the little brokers are protecting the interests of Wall Street over their own customers because most of them sell their order flow to Wall Street. Could you imagine if 3.8 million apes started averaging down, buying AMC on margin? That could cause a serious problem for Wall Street, couldn't it? I'll tell you what. Call the toll-free number of your broker and find out, can I buy AMC on margin? And ask them why not. And by the way, if you're still trading at Robinhood after everything that's happened, someone should come by your house and hit you on the head with a tack hammer. It's time for you to move on from Robinhood. They are not on your side. Not then and not now. You guys already know what happened last week, so I'm going to close with this. We had the greatest third quarter in our company's history, and our CEO decided to throw all of it away, throw any momentum we could possibly gain by announcing he's selling more stock when we have over $750 million in checking. If you're still an Adam Aaron fanboy, hit thumbs down and unsubscribe. If you're with me and obvious common sense, please hit the thumbs up button and share the video. Here's your headline. Thousands of AMC shareholders wanted the board to go, but abstentions carried the day. Tens of thousands of AMC shareholders voted to, in essence, throw out the entertainment company's board, but the proposal went nowhere because of no-shows and abstentions. AMC reported the results of its Wednesday shareholder meeting in a regulatory filing late Thursday. The first of 7 proposals called to declassify AMC's board of directors and to shorten all existing terms so they'd end at the meeting. That got more than 34,000 yes votes to about 6,000 no votes. Nearly 800,000 abstentions and no-shows, however, carried the day. Non-votes had the same effect as a vote against the proposal, AMC said in the filing. Other proposals had a similar fate, including a failed proposal to approve on a non-binding advisory basis the compensation paid to certain AMC executives. AMC stock, down 8.04%, dropped another 1% in the extended session Thursday after ending the regular trading day down 14%, hit by earlier news that the company plans a $350 million stock offer. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.